Welcome back, everybody, to Show K of Primary Source China Investment. Peng.guo and I are happy you're here. We really appreciate your comments and hope you'll reach out if there's any questions. Today in policy, we're talking about Spar Wars. It's just spring, and it seems like the rhetoric has really amped up and it's hotter than July. China, it seems to be sparring with everyone, the G7, local countries, even countries that are not on the radar. So what's happening? Well, a lot of these countries, as we've talked about before, are wading into what China considers core interests. And of course, China is more forcefully commenting back, either in social media or in the state-run media. So for investors, this is headline negative because it creates volatility, but it might be China positive or mainland positive. And let me explain. The propaganda machine will continue to ramp up, and consumers will have to demonstrate how red they are. And they demonstrate this by buying local products and supporting state-run entities. What will that mean for foreign entities? This is the derivative effect. So strategy from the foreign company's perspective has to evolve. They have to have an opinion on some of these issues. And those companies that are doing business in China understand this very, very well. We used to say, policy is policy, business is business. But is that a strategy anymore? Can we really just hold on to that?
Actually, I don't think so. There's politics and business are always tied together. They'll never ever be able to separate. I think China and the Western countries, the most important thing is Western countries having to find a good way to deal with such big size of the China, especially in the pandemic era, in the difficult economic situations.
It seems petty though. I mean, I'm looking at what's happening with Australia, and it's really like this tit for tat. And Australia says something, and then China says, I'm not going to buy your coal anymore. And then something else happens and they ban some other consumer product that's coming in. And, you know, this sort of escalation doesn't really help anybody. And it doesn't look like the politicians want to have a civil conversation. They want to litigate this thing in the press, which is obviously the worst way to do it.
Yeah, that's right. I think Australia is definitely a good example. China has no any historical conflict with Australia, right. And they are the best business partner before, largest client and the largest supplier. I think that right now you will see the change. So the Australia become much quieter. So probably they rethink the policy, some of things. Like I said before, if I'm the wine company from Australia and our business gets screwed up in the China market, and after a couple of years, maybe China and Australia become best friends again. But this company go back to the China market, they will see, oops, South American or from the United States and different countries already take the piece of the market pie. So it's pretty hard for the business. We should not just follow the politicals to make the business decision.
Yeah, it looks like China is rapidly looking to replace those things that it gets from China. I was reading, I'll put up a headline about they're looking at Turkmenistan gas to replace Australia gas, but it's not just Australia. It's Japan. It's obviously the Philippines, which is a bunch of quackery, but it's also the EU and you know, of course, the US with the harsh language that's come from both sides, following up on the Alaska meeting, which we covered. So all of these countries now are facing some tough choices, and you know, we talked about this idea of this quad, which you know a lot of people sort of joked about, but there does seem to be more and more countries that are looking to oppose the China framing or the China argument about some of these key issues. And it just looks like this is accelerating. It's not decelerating. The temperature is not coming down. It's actually going up.
Yes, I think a couple of tips. Firstly, it's hard to change the people's opinion. So think about it, how difficult you convince the other people wear the mask or wear the mask appropriately. It's hard to change another country. As long as you get a good business relationship, you can resolve a lot of the problem, rather just simply fight each other.
Yeah, a lot of this seems to be top down instead of bottom up. I mean, if you had a lot of these business leaders on the ground and you know have a channel of communication that's open, it seems now that the channels of communication are the press and sort of quarterly meetings, which really doesn't help.
Yeah, I think as long as both parties that we need to solve the problem, they can find a solution. For example, Apple, when they work together, they just find the solutions to solve this problem. Both parties happy.
Yeah, those kind of issues are very endemic to China. It's doing business on the ground in China. There are a lot of regulatory hurdles. There's a lot of new rules. It's constantly changing. So you need to be on the ground and operating. I think that's the message. And getting back to what we said at the outset here, foreign companies doing business in there have to continuously update information, update their business model, and update their procedures if they want to continue to compete on the ground in China. And this has a very high cost.
That's exactly right. So I think China definitely need to pay much attention to managing the policy change. It's better to construct a stable environment to do the business.
Yeah, well, we're going to continue to watch what I'm calling these Spar Wars as they continue to unfold, and hopefully cooler heads will prevail, and we'll get more constructive conversation instead of just this back and forth from the press and social media, because that's not that helpful.
That's right, yeah.
So today in capital markets, we're going to visit a well-worn subject, which is volatility in A-share stocks. Anybody that's talked to me for any period of time about A-shares knows I like to put a little bit of fixed income in. And why is that? Because China is not a set it and forget it market. The major market index, the CSI 300, is horrible on a risk-adjusted basis. You are just taking too much risk for not enough return. Also, on the stock picking side, we've seen tons of great companies that have great performance historically get drawn into this non-systematic risk and tumble as a result. So is there a way to have your cake and eat it? Can I get long A shares and can I hedge my risk a little bit? Well, there's three ways. The first is target a volatility level. The second is use a momentum overlay. And the third is actively use futures. So we're going to get into that a little bit. So the first up is target a volatility percentage. So either that's 12 or 18 or 20. And when volatility is rising, you're selling equities and you're buying fixed income or moving into cash. Conversely, when volatility is dropping, you're buying more equities and rotating out of cash and fixed income. The second is a momentum strategy. And peng.guo, you've talked about this a lot. Why don't you explain a little bit about what the momentum strategy does and how you implement it?
Momentum strategy is really like the trend following strategies. The most important thing is while the uptrend is almost is to the end, or it's starting change to the downtrend, and you have to just get out of the market and watch it and wait that before the market back to the uptrend, just continue to follow it.
So what are the triggers for that? How do I know when I'm
we currently use the three models to do it. One is a micro model, just really from the micro perspective to figure out the high level risk on and risk off, what's the impact for each big asset class. And secondly, we use the risk model. So we need to identify the risk characters of each asset class. Mm-hmm. The third one is we need to use the technical model. So we need to combine the multiple technical indicators and to combine them together to find out the signals. What's the best way to enter in the market and out of the market? And most of the time, we have the entire process. We make it like a rule-based process. That is that we make the whole process to try to be transparent and try to be easy for the investor follow up. That means that we created the new index families to do it. So it looks like it's a very impressive result.
So can you have your own indexes for this, but can you implement this with a garden variety CSI 300 ETF?
That's exactly right. So the components, we can use the ETF, we can use the like the quant portfolios, we can use whatever high related to the CSI 300. For example, before we doing that, the annualized return in the past 8 years is around 11%. Mm-hmm. So after we do it, the return is up to the 19%. It's much higher.
Right.
The most important thing for the volatility dropped almost 40%. So the Sharpe ratio is quite impressive. So before doing that, Sharpe ratio is 0.49. And after we're doing that, it's 1.1.
Well, we'll put up some charts on that and demonstrate a little bit more. But I wanted to talk about the third way, which is to actively use futures. And now on the mainland, what is there, peng.guo? There's the CSI 300, the CSI 500, and maybe the Shanghai 50?
That's right, yeah.
Yeah. So.
I think futures is another popular way to do it. Why we use the futures to do the hedge? I do see like the full hedged portfolio and time in the market to hedge the portfolio. There are many different ways to do it. But overall, I personally think the trend following strategy would be the simplest way. And also the futures volatility, it's hard to manage and match with exactly your portfolio. And in the long term, you need to roll in your active portfolios. So, and also we need to think about the customers' expectations. That's very, very important. So in China, pretty much in the whole world, the customer its expectations is really like the CS 300 or SP 500 index.
Yeah, in my experience, peng.guo, there's a lot of unreasonable investors. So if an investor says, "Oh, I need 50% return and I want no risk," well, then you're not going to be a customer because that's totally unrealistic. And it behooves us as money managers to tell those people that you have unrealistic expectations.
Yeah, this is why we think index investment and creating a new index is the best way to invest in China. Firstly, it's transparent, and secondly, easy to understand how you make money, just make the from the uptrend. And the third way is the customer education in China. There's two things is very popular. Firstly, is index investment, and secondly is invest regularly. So those are the things is a lot of companies do the market education, and so most of the investors already accept it. So and the next thing is you just compare the result. So we compare our index with the a corresponding index on a daily basis. So that's easily you can figure out what's the difference.
Yeah, the transparency is helpful because people, when they think of a major market index, they understand what's in that. It's easy to look up. And then also, if you have an overlay or you have, this sort of rotation into cash, people can understand that it's not a complicated concept in order to reduce volatility. And I think at the end of the day, a lot of people talk about the opportunity in the China market, but the risk is what really is unattractive about the market. And if we can...
That's exactly right. And the client is hard to put the money into the high volatility market. But if you see clearly, if you figure out the uptrend from this high volatility market, you definitely reward you a lot.
Yeah, yeah. Okay, well, I think we've addressed how you can manage volatility. This is an important concept when allocating to A shares, specifically mainland stocks, and also all of these tech stocks in China that have really come under scrutiny from the central government. That's going to be it for this week. Thanks for tuning in. Drop your comments below. Reach out to us if there's any questions. We really appreciate your time.
Thank you, guys. Enjoy the spring.
Absolutely.